Hello and welcome to today's video on the top 5 investment tips. Tip 1. Starting early. First, let's talk about the importance of starting early. The earlier you start investing, the more time you have for your investments to grow due to compound interest. This means that the interest you earn on your investments can itself earn interest, leading to exponential growth over time. Tip 2. Diversification. Diversification involves spreading your money across a wide range of assets in order to spread risk. This can help protect your portfolio from the impact of any single investment underperforming. Tip 3. Keep your costs low. Another important tip is to keep your costs low. High investment fees and expenses can eat into your returns, so it's important to try to minimize them as much as possible. One way to do this is by opting for low-cost index funds or exchange-traded funds, ETFs, instead of actively managed funds. Tip 4. Not to try to time the market. It's also important not to try to time the market. It can be tempting to try to predict when the market will go up or down, but this can be difficult and there's no guarantee that you'll be right. Instead of trying to time the market, consider adopting a long-term investment approach and staying invested through market ups and downs. Tip 5. Staying informed. Finally, staying informed is crucial for making informed investment decisions. Keep up to date with developments in the financial markets and in the economy in general, but don't get too caught up in the day-to-day fluctuations of the market. Focus on your long-term investment goals. Thank you for watching. I hope these tips were helpful for you in your investment journey.